Today's conversation is sponsored by First Generation Capital Partners. If you're an accredited investor and you want to know about how we're helping other accredited investors keep more of their income, go to firstgencp.com/going long.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. And yes, I'm your host, Billy Keels, and I'm super excited about having another one of these solo episodes because based on your downloads, this is something that you're liking. And also too, I've seen a couple more comments, which I'm really liking. I appreciate that about you. And I like to keep these relatively brief. And so, but one of the things I do want to say is, hey, listen, thanks so much for continuing to share across social media and your screenshots, and you're starting to tag us even more. Really appreciate that. A lot of you on LinkedIn that are doing that, and on Instagram, really appreciate that. And then also too, seeing more of you even leaving your honest written reviews as well as ratings. We really appreciate that. And for anyone who wants to check out any of the previous episodes, just go to firstgencp.com/podcast, and you can find them all, even all of these solo episodes. So today I actually want to get into one of the things that has kind of been perturbing me for quite a while. But before I do that, I do want to recognize those of you that continue to leave your honest written reviews. Today, I want to recognize one other person. And today we're going to recognize Shanty262. Hopefully I'm pronouncing that right. Your comment about the podcast is packed with real value. I just listened to the episode with Jim Pfeiffer from Left Field Investors, and I learned so much. I've been in multifamily for over 20 years, and as an owner operator, I was absolutely blown away. Jim really gives up the goods on passive investing in real estate, and his experience is invaluable. So yes, and I can second that. Jim Pfeiffer from the Left Field Investors, one of the founders, he had an absolutely awesome episode, and really appreciate someone taking time to leave that. Once again, Shanty262, thanks for leaving your honest written review. We appreciate that. And listen, I'm going to pivot a little bit because I want to talk about something that really has had me perturbed for quite a while. Like, not very happy, because I started realizing there was something I didn't understand. And now I don't want you to fall trapped to the exact same thing that I fell trapped to. And had I understood this one concept, my 9 to 5 would have been optional even sooner, right? I'd misunderstood this concept still in my 40s, I was out of the corporate world, but I want you to understand it much sooner, be clearer, because it's going to help you to make a much more informed decision. And I want to tell the truth about passive income, right? I'm going to talk to you about why specifically I hate the term passive income. And then I'm also going to talk to you a little bit about why I absolutely love passive income, but we're going to get to the truth of the matter. And so I think first and foremost is some of the reasons why I truly hate the term passive income, because this is a buzzword that is so misunderstood and misused. I see it every single day across social media, especially on the LinkedIn platform, because I spend a lot of time over there. Passive income, and literally, I don't want to even go down the track, but it's just to say something from the very beginning. Passive income is not the same thing necessarily as passive investing. They're not the same. So let me help to get to the truth of the matter. And I need some help. So I'm actually going to go to investopedia.com, which is one of the favorite resources that I use all the time because I'm constantly learning new things. And I want to share with you this buzzword that is completely misused so frequently. I want to actually share the definition with you. Number one, first and foremost, in Investopedia, understanding passive income, I'm going to go through, it talks about the different types of income, proponents of earning passive income, et cetera, et cetera. But here's the definition. Passive income, when used as a technical term, is defined by the IRS, the Internal Revenue Service, as either net rental income or income from a business in which the taxpayer does not materially participate. And in some cases can include self-charged interest, blah, blah. But the idea is it's defined by the IRS. Passive income is actually a defined term by the Internal Revenue Service. So first and foremost, it shouldn't just be thrown out like every single other term because it actually means something. There is a reason for it. I know I'm a little bit passionate about this, but I just have to share that. That's the first thing, that it is not just a buzzword. There's a definition for passive income, number one. And number two, quite frequently, though, another reason that I don't like the buzzword passive income is because when it's used, it's supposedly going to solve all of your problems. And let me tell you, because I had a lot of frustration with passive income, specifically the passive losses generated from passive income or from depreciation, but that's a whole different thing. Not understanding the passive losses actually created a lot of frustration for me. Maybe we can talk about it in another episode, but basically I had a lot of money that was trapped for a long time. Had I released that money, I would have been able to make my 9 to 5 optional much sooner, right? So number one, it is a term that is not used properly because there is an IRS definition as to what passive income is. And number two, because I did not realize that passive income, because it's thrown around all the time, that it does not solve all of your problems. It can actually make some of your situations more challenging. Like one of the things that was happening to me, that I had a lot of money trapped in these losses that I could not actually access. As someone who was an accredited investor, a high-paid professional, passive losses actually didn't help me move forward as quickly as I thought they were going to. But that's a whole nother story. Happy to talk about that. And that came because of some of the depreciation that was happening, et cetera, et cetera. Not a tax advisor, not any of that kind of stuff, just sharing my own personal experience, right? So I've got some real passion around the term passive income. I also have a lot of love for passive income. Let me explain. So the thing about passive income that I absolutely, really, really adore is that it is extremely tax efficient. The income that is generated and is defined as passive income, i.e. through your rental properties or through things where you do not materially participate, that income is extremely tax efficient. And this is the part that I did sort of understand, but I got a lot of clarity afterwards because you make mistakes and you get better at what you do. And so once I understood that the income that is generated through passive income, like passive income as it's generated, and the losses that are also offsetting that income, that makes it extremely tax efficient. So it's a great thing for the income that's generated passively. The offsets that are passive losses, well, that makes it much more tax efficient. We can get into detail, or happy to talk to you about that at a different time. Or if you want to know more, just leave it in the comments and let me know, hey, this is part of your written review. Billy, Q&A. You want to have more of these kinds of things. And also, another thing that I really, really adore about passive income is that it's taxed differently. So there are different tax brackets. And just to make it very concrete, like if you are earning at the high end of your job, your W-2, you can be taxed as high as 37% federally, like across the nation. Then you add your state tax and stuff like that. And on the same token, if you earn the exact same amount of money passively, the highest tax bracket in passive income is like the long-term capital gains, and that is 20%. So if you just look at it at the highest level, like there is a 17% difference, at least when we're recording this today, right? And so the tax brackets on passive income are much more, in my opinion, much more beneficial. So that's another reason that I really, really like it. And when you combine this, as I talked about before, with depreciation, it can be very beneficial on the income that is passive income. Those losses from depreciation passively can be offset passively. Once again, not giving anybody any tax advice, just talking about these concepts. And so, yeah, I've got a really, I hate the term passive income because I think it's misused a lot of times. Hopefully this IRS definition that came from investopedia.com will help you understand that when you hear passive income, you should maybe be asking yourself the question. I know I started asking myself the question, does this person that's actually saying passive income, do they understand what they're actually saying? And how, when you're generating passive income, is that the best type of income to be generating for you? If you're getting those passive losses and they're trapped in your specific asset, is that the best thing for you? Maybe as a high-paid professional, as an accredited investor, and just start to be more curious. Because once I became much more curious about what passive income really meant and how it affected me personally, I started looking for different types of opportunities. So at the end of the day, these are two different buckets: active income, passive income. And today we're talking about passive income. But and the thing is, if you want to understand more, especially if you're an accredited investor, and maybe this resonates with you because you've been in this situation. I know it happened to me in my 40s. If you're listening to this, you're in your 20s or your 30s, you're already an accredited investor, or maybe you're in your 60s or 70s or 50s. There's time. There's always time to take action, get more educated. We made a very simple guide for you. And the way that you can get access to that guide, just go to firstgencp.com/going long. You can find out the difference between passive income, active income, some of the things that we're doing to help accredited investors today to be able to take more control, specifically over the portion where you're probably making the most, which is on your active income, and understanding passive income. So once again, go to firstgencp.com/going long. You can pick that up. And I really hope that this has helped you today. I know I've been a little bit passionate about this, but this is a term that I think is really misunderstood many times. And hopefully this has given you more clarity today based on the experiences that I've had. So while you're thinking this over, while you're downloading the guide, I'll be here preparing for the next solo episode. So until then, go out and make it a great day. And thank you very much. Trust that you enjoyed today's conversation. And once again, today's conversation was sponsored by First Generation Capital Partners. If you're an accredited investor and want to find out more about how we're helping accredited investors to gain their personal freedom even faster, go to firstgencp.com/going long.